Hi, so we're going to continue with our discussion here. Our network, for some reason, just jumped up and then the stream ended, unfortunately, on that. So I'm going to leave a link to the description in the description to the first part for those of you who be watching the playback, so you can check the description of the video and you'll be able to get that part one, and so that you can follow suit in this. Eureka said, welcome back. Say, you're welcome, Eureka. Welcome back as well, and thank you for joining back. Let's see if some people will be able to jump on in back real quick so that we can build up. Okay, so I see some of you guys joining. Welcome back, welcome back, welcome back. Give us a thumbs up on the video when you join. Give us a thumbs up on the video when you join. The stream ended, and then we just have to quickly switch to another stream key. So let's see how it goes. All right, so I see some of you guys coming back. All right, okay. Give us a thumbs up on this video as well. Give us a thumbs up on the video. All right, thank you very much. Thank you very much. Okay, okay, so let's get going. Let's get going. Okay, Andrew Opombeko, I see you back. All right. Okay, so let's go real quick. Let's go into it real quick. Right, so we've gone through those already. Let's look at the fundamental principles, and there are 5 of them: integrity, objectivity, professional competence and due care, professional confidentiality. Okay, then the last one is professional behavior. Professional behavior. So these are the 5 things that we need to understand. So let's go through them one after the other. Now, when we say integrity, what do we mean? According to ISBA, like, what do we mean? Foster Bartios, I see you. Welcome to the stream. Welcome back to everybody who is rejoining from the previous stream. I know it might be difficult for you finding it out, but it's since you joined, thank you very much. So give us a thumbs up when you join. Give us a thumbs up when you join. So integrity. When we say integrity, what does that mean? This is what it means. Integrity means that in the carrying out of the professional duty of the accountant, he must be honest and straightforward. Okay? So in every dealings that you are carrying out, the auditor or accountant must be honest and what? Straightforward. That is what we mean by integrity. So whatever it is that you're going to be doing, a client calls you to come and audit financial statements, or you are preparing the financial statement for a company, or you are filing a tax returns with a regulatory authority, you have to be a person of integrity. Everything that you are doing, you have to be straightforward and you have to be honest in your professional dealings. That is the first thing about integrity. The professional accountant or auditor must be straightforward and honest in all his professional dealings. But straightforward and honest to who? The professional accountant must be straightforward and honest to, first, the client's entity, the client who employed us, who engaged us to undertake the audit, as well as to regulatory authorities. Okay, so you have to be honest to the client. So for instance, a client calls you and a client is trying to do something, and the client says that you should prepare his tax returns for the client, and the client is trying to do something, and you have to tell the client that, hey, if you don't include this in it, this is the tax law, these are the things that you could be affected with, so don't do A, B, and C, so that you don't get punished by the law, you don't get affected by the law. What are you doing? You are being straightforward. You are laying out the laws and the acts about what the client is doing. But not only to the client, you've got to be honest and straightforward with the regulatory authority. So if there is something you know about a client entity, there is something that you have about a client entity, and you are disclosing that to the regulatory authority, and you're not being straightforward, you are not being honest, then you are not behaving well as a professional accountant. So that is the first fundamental code of ethics, that in carrying out the professional duty of the accountant or by the accountant or the auditor, he must be honest or straightforward. For gender balances, he or she must be honest or straightforward. That is the first thing. Integrity. Integrity. In addition to integrity, the professional accountant must be objective. Now, what is the meaning of objectivity? You see, one of the things you must understand is that the professional accountant is going to be making a lot of judgments, a lot of professional judgments in the preparation of financial statements, in the auditing of financial statements, in the carrying of his professional duty. So in the carrying of the professional duty of the accountant, he's going to be making a lot of professional judgments. Objectivity simply means that in the making of these professional judgments, the professional accountants must ensure that there is no bias or conflict of interest. There is no bias or conflict of interest in the judgment he is making. That is what we mean by what? Objectivity. So to be objective means not allowing bias or conflict of interest to affect the professional judgment that you are making. So for instance, if we are preparing financial statements as the accountant and we are doing provision for bad debts or provision for depreciation or provision for discount allowed or whatever provision that we are doing, that is a professional judgment we are making. We have to make sure that the judgment we are making is not full of bias or there is no conflict of interest. What does that mean? For instance, an entity can say that, or your CFO can come and say that you are preparing the financial statement, but you are not supposed to charge depreciation. Just carry the assets the way we carried them the previous year, because when we charge depreciation, profit will reduce, and when our profits reduce, we will not be able to get our bonus, and because of that, our financial position will also fall, and that is not also good for the business. What are you doing? There is conflict of interest. What are you doing? You are not being honest to your shareholders. You are not being honest to the users of financial statements. So in the making of those professional judgments, this ethical principle requires that you make sure that there is no bias, there is no conflict of interest. So again, you are on the board and you are suggesting the dividends that are supposed to be paid. And you are a shareholder as well as a board member. Then you raise your hand and say, I think that when we pay dividends of $20 or $30 per share, that is okay. Now, when you are making that decision or saying that thing or making that judgment because you are going to be receiving part of that dividend, then what is happening? Conflict of interest. So what are we saying? In the making of professional judgments, the professional accountant or auditor must ensure that there is no bias or conflict of interest. That's the second thing. So you realize that your making of the professional judgments could also be could also illustrate whether you are honest or you are being straightforward with us right now. So that's the second thing, objectivity. Objectivity. The third thing is professional competence and due care. Professional competence and due care. Now, as you can hear, there are two things in here, and we have to look at them in light of the way they are. Professional competence is one side, and then due care is another. So when we say professional competence, what are we saying? Professional competence simply means that the professional accountant or auditor is required to possess the necessary skills, if you want, expertise, if you want, or experience required for the job or the activity being carried out. That is professional competence. The professional accountant or auditor must possess or should possess the required or necessary skill, experience, or expertise for the job being carried out. So you cannot prepare financial statement if you suck at accounting standards. You cannot authorize financial statement or audit financial statement if You are not an auditor. You don't have the skills. You don't have the expertise. You don't have the experience. You have not been in the trenches before. You are not even licensed to do that. That is what we are talking about professional competence. Are you competent to do the job? Do you have what it takes to do the job? Have you done the job before? Are you in the right framework regulatorily and ethically to do the job? That is what we mean by what? Professional competence. Competence. Then the next one is due care. Remember I told you it's in 2 slides, competence and due care. Now, due care simply means carrying out the activity in line with the way it is required to be carried out. So, for instance, if we are auditing financial statements to enhance quality audits and to issue an auditor's report that can be relied upon, the auditor needs to gather sufficient and appropriate audit evidence. How does he do that? He does that by, number one, before saying yes, before issuing an engagement letter, the auditor must do some pre-acceptance procedures, or must go through some pre-acceptance procedures, like looking at his expertise, looking at his qualification, looking at his independence, speaking with the outgoing auditor, looking at who the management of the company represents, looking at what the business is into, what are the risks associated with that business, do we have any reason not to audit them or to audit them? So these are all procedures you go through before you say yes. That is what we refer to as what? Due care. Following the standard procedure, the standard manner in which something is supposed to be done. So what are we saying here? The third principle is that not only should you be skilled, not only should you have the knowledge, not only should you have the experience, but also in the carrying out of your duty, you must carry it out in the manner in which it is expected to be carried out. This is where the issue about professional negligence comes in. So where the professional accountant or the auditor refuses to follow the laid down standards, the laid down way of carrying out a certain work or doing a certain thing, then it results into what is mentioned as, or what is stated as, professional negligence. Professional negligence. So that is the third principle you must understand. Professional competence, having the skills, having the knowledge, having the experience required or needed for the job. Due care, carrying out the job in accordance with generally accepted practice standards. Carrying out the job in accordance with generally accepted practicing standards. That is very, very important. And that is the third thing, professional competence and due care. Professional competence and due care. So, you've got to be straightforward. You've got to be honest to whom? The client entity who employs you, the regulatory authority who is looking after the client entity and looking after you as well. You've got to be objective. It means that you're going to be making a lot of professional judgments. In those professional judgments, you have to ensure, the accountant or the auditor must ensure that there is no bias or conflict of interest. Not only that, as a professional accountant or auditor, you must make sure that you possess the competence, that is the skills, the knowledge, the expertise required of the job that you want to do. But not only that, you must make sure that you follow the generally accepted practice standards for undertaking such jobs. Because if you don't follow the generally accepted practice standards, then it results into what is called professional negligence. We good so far? I see some of you guys joining. Give us a thumbs up on the video when you join. Comment in the chat box with any questions you have for me. Comment in the chat box any questions you have for me. I would want to hear from you. What topics would you want me to cover? What topics would you want me to cover? Put it in the chat box for me. Francis Oseipoku said, when will you have a live lecture on taxation? Francis, give me a topic in taxation you want me to teach. All right? Whatever we are covering on the live stream is based on what students want me to cover. So don't give me a subject, give me a topic. So in taxation, what is your pain point? What are the areas in taxation you would want me to cover? Give me that in the chat box and I'll add it to my bucket list of topics. And then, who knows, maybe tomorrow or Monday, I could be touching on something in tax for you. So Francis, Put it in the chat box for me. What in tax would you want me to cover? What in tax would you want me to cover? Number 4. Now, of all the principles, this is one of my favorite, personal favorite, and that is confidentiality. Confidentiality. You see, when the professional accountant is carrying out his duty, or the auditor is carrying out his work, he is going to come into possession through his work what is called essential information, either about the client entity, about management, or about the employees of the organizations. So as far as you are carrying out the work, you are going to become coming across, or you're going to have in your possession, essential information about a client entity, its management, its strategies, its employees, and various other essential information. Confidentiality simply means that the professional accountant must not disclose any information, any essential information about the client entity to third parties without prior permission from the third party. Listen carefully. The professional accountant cannot or should not disclose any essential information from the client entity to third parties without prior permission. Now, what do we mean by that? What do we mean by that? Okay, I see a comment again. Victor Mensa said, Nhyira, thanks for the good work. When are you treating public sector accounting? Victor, tell me a topic in public sector accounting you want me to cover. Put it in the chat box. Tell me, whatever I'm covering on the live stream is based on what you guys want me to cover. So please put it in the chat box. What topic in public sector would you want to see me cover on the live stream? So put that in the chat box for me, and I will add it to the bucket list of the topics that I have, and I will be covering something in public sector any moment soon. So let me know, what in public sector would you want to see more, Victor? And then also Francis, in taxation, let me know what you want to see more. So when we say confidentiality, what does that mean? So for instance, you are boys, it is Sunday, you are at the bar and you are chewing some pork meat and sipping some drinks, and then you start chatting, and you are auditing a firm, then you start chatting, then you say, hey, Charlie, you know this man, Charlie, the money the man they chop, Charlie, in salary bola, every 2 weeks, he they travel go Dubai, come. Charlie, in salary, Charlie, they think like, OPPP there about to, and they talk, what are you doing? You are breaching the rules of what? Confidentiality. And I know a lot of you are guilty of this. You aren't supposed to say that. Now you will say, oh, Nhyira, I trust my friends. They're not going to tell anybody. But one thing you must understand, this is very critical as a professional accountant, is that whoever you claim you trust, and this is the reality of life, whoever you claim you trust also trust someone else. So after that conversation, your friend might be talking to probably his girlfriend, and then, or his wife, or his mother, and then that thing will be passed on to that person. That person also trusts somebody, and before you know it, an information that is not supposed to be out will be out in the public domain. That is what we mean by what? Confidentiality. Ensuring that you do not disclose any essential information about a client's entity, which you become knowledgeable of as a result of what? Your duty or your roles in the client entity without prior permission. Girls, you thought I would leave you girls. You are lying. So girls, in the salon, doing their hair, doing the pedicure, manicure, and all of the cures. And all of a sudden, a TV on, and then someone comes on. Then he said, you see the man? You don't know this man. The man has money. And can you imagine the bonus this man takes every year? You know, this man is rich. You know, the car he's driving, the company bought a car for him, and it is $1.2 million. That is the value of the car, and they gave it to him free of charge. What are you doing, my dear sister? You are breaching the rules of what? Confidentiality. You are not supposed to disclose any information. Now, remember, like I said in the beginning, These fundamental principles aren't just for members, but they are also for students. So yes, you might not be chartered yet, but as far as you are engaging in the accountancy, in the audit field, you're going to come into possession many information. You've got to make sure that you don't disclose those information to anybody. Now, the fact that the professional accountant cannot talk does not mean he cannot actually talk. So there are what we call exceptions to the confidentiality rule. Number one, where the professional accountant or auditor recognizes that the entity is involved in money laundering, then he must report that to the Financial Intelligence Center or the Bank of Ghana, if you are in Ghana in that case. Does it make sense? So money laundering is a huge aspect in audit and assurance that probably we'll discuss later on if we are discussing advanced audit and assurance. But if the entities engage in money laundering, child trafficking, printing of fake currency, doing some illegal activity, transferring money from one country to another, to another, to another, to another, to another, you can't even trace the source of the money. If the entity is engaged in any of these things like terrorist financing, buying of weapons, and all of those things, and you, the auditor, you see it and you keep quiet, you're in trouble. You're going to be screwed. So you have to tell it to the Financial Intelligence Center and to the Bank of Ghana. Now, when you say it, are you wrong? No, because that is in the public interest. That's the first thing. Second thing is, if the professional accountant is a witness in court. So for instance, if you're a witness in court, like the way currently some banks and the Bank of Ghana are in court, the auditors and the accountants may be invited by the court as witness, either by the plaintiff or by the defendant, to be witness to to make some certain statements. At that point, you don't need the client's permission to say something or not to say something. What do? You just say it the way it is. So the second exception to the confidentiality rule is when the professional accountant or the auditor is a chief witness. Another thing is if, for instance, the professional accountant is defending himself before the disciplinary committee of the regulatory body, like ICAG, the Institute of Chartered Accountants Ghana. So remember, those audit firms that were fined by the Institute of Chartered Accountants Ghana for their involvement in the collapse and mismanagement of some of those banks, they were invited first and they were spoke. So they were queried. Now, at that point, you don't need to speak to the client and say, hey, ICA has called you. If I go, what should I say? No. You don't need his permission. You go there and say what it is you need to say, because if you're not careful, your license may be seized in that case. So there are exceptions that comes along with the confidentiality rule. But in a nutshell, what we're saying here is this: do not disclose any information without the permission of the entity. Only disclose the information if it is of a public interest. And like I say all the time, the word public interest is not defined in any law book in the world. Hence, it is important to seek legal advice prior to deciding whether something is of a public interest or it is not a public interest. That is what we mean by confidentiality. Right, I see some comments coming in. Let me look at them real quick. Let's see. Augustine Boatin, hello Augustine, I hope you're doing well. It's been a while. Mark Akpatuma said, hi sir, I kindly request for a comprehensive lecture on International Corporate Governance Network. International Corporate Governance Network. Okay. We're gonna see that. Let me add it to my bucket list of topics here. International Corporate Governance Network. Okay. Let's see. Then the last one, professional behavior. Professional behavior simply means that the professional accountant, listen carefully, this is my favorite area as well, the professional accountant should not engage in any activity. should not engage in any activity or business dealings that brings shame or discredit to the accounting profession. That's what we mean by professional behavior. So don't take bribe. Don't be involved in any money laundering issues. Don't help the company to evade tax. All of those things, when you are doing it, you are not behaving well. And since you are not behaving well, you are not helping the accounting profession. You are actually disgracing the accounting profession. Remember in my intro, I mentioned that when the banks started collapsing and auditors, people were asking, so who are the auditors of the company? Which firm was auditing them? Didn't they see this going on? How did it happen? So all of these things are there, and we must make sure that as professional accountants, we do not do anything to bring discredit to the accountancy profession. Any questions in the chat box for me? Any questions? So these are the fundamental codes of ethics. So remember what we said. There are fundamental codes of ethics that must be followed. What are the fundamental codes of ethics that must be followed? Here they are. Integrity, being straightforward and honest. 2, objectivity, not allowing bias, conflict of interest to affect professional judgments. Professional competence, possessing the skills, knowledge, expertise required for the job. Professional due care, carrying out the work in accordance with generally accepted practice standards. And then confidentiality, ensuring that information, essential information about a client's entity isn't disclosed to third parties without prior permission. However, there are exceptions. And then professional behavior, ensuring that the professional accountant does not engage in any act that actually brings discredit or shame to the accountancy profession. These are the fundamental codes of ethics. But as part of the conceptual framework approach to ethics, these ethical principles are subject to threats. In other words, these are the things that you have to abide by. As a professional accountant, you have to be guided by these things. But there are certain situations, certain circumstances, certain scenarios that actually affect the professional accountant and his or her ability to be able to adhere to these. These are what we refer to as fundamental or threats to ethical principles. So let's look at the second slide, and that is going to be threats to ethical principles. Threats to ethical principles. So again, there are going to be 5 threats that we're going to be going through here in that case. So let's go. What are they? Self-interest threats, self-review threat, advocacy threats, intimidation threats, and then what's the last one? Let's cross check before I give you a bomb. Familiarity threats. How could I forget that? So these are the threats to the fundamental principles. So let's go through them. Self-interest threats, self-review threats. What are they and how do we talk about it? Now, remember I told you that the issue about ethics is in 3 folds. You must know the fundamental principles, then understand the threats, then the safeguards. So we've done the principles, we are now on the threats. So let's take the threats one after the other and dive a bit deeper into them. So when we say self-interest threats, what are we talking about? Self-interest threats arises as a result of the professional accountant having either financial or non-financial interest in the client entity. Okay, so this is where the accountant has either financial or non-financial interest in the client entity. That results into what is called the self-interest threat. Now, there are various ways through which self-interest threats can arise. So let's look at some of the ways, some of the scenarios that results into self-interest threat. I see a comment from Augustine. Let me see. He says, are there any protections that guide the auditor or accountant in the course of disclosing any illegality going on in the entity? Yes, according to the Money Laundering Act of Ghana, because I'm familiar with Ghana, so that's what I'll say. In Ghana, there are certain procedures that you need to follow. Now, one, after you report what you have seen to the regulatory authority, there are a couple of rules. Number one, after you report, you are not supposed to tell anybody else. Then, the officer who took the information from you is not supposed to also speak to anybody. In other words, he shouldn't know your name. You shouldn't know his name. That is the rule. And then if you read the Money Laundering Act, there are other issues that are there. So if you really adhere to the issue about anonymity, then you will be able to protect yourself. So yes, legally, it all depends on the auditor. If you're a talker and after telling the Financial Intelligence Center or the Bank of Ghana, you also go ahead and tell your friends, I was the one who told them about it. Before you know it, you will be killed. So, Augustine, yes, there are laws that govern how you need to go about these things. And if you should follow the letter of the law on how you should go about these things and all other things being equal, it doesn't get messed up, then you will be able to go through. Mark Akpatuma said, also risks, identifying, assessing, and controlling risks. Your lecture on Fitzgerald and Moon building block model was priceless. You are a skillful teacher. Thank you very much, Mark. Okay, so you're talking about risks, identifying, assessing, and controlling. So that is audit risks, I guess. We'll look at that as well. So let me add it to my bucket list here. Risk assessment. Okay. All right. So we'll look at that as we continue. So let's go. You ready? Let's go real quick. So self-interest threats can arise from various scenarios. Number one, it could be because of the fact that you have what? Financial interest. Financial interest. So, for instance, you are a shareholder of the company. So the accountant, that's why we said the auditor cannot be an employee of the company. The auditor cannot be an investor of the company. The auditor cannot be a bondholder of the company. All of those things result into what? Having some financial interest in the client entity. Now, should you have a financial interest in the client entity, it means that this will affect your professional judgment. This will affect any decision that you are making, because if you know there is an issue, there is money laundering, and you have to disclose it to the Financial Intelligence Center or to the Bank of Ghana, and you know that if you disclose it, this company is going to go down and you are not going to get any job to work, then what is happening there? Your objectivity is going to be impaired. Your professional behavior, meaning you are doing something illegal that you are not supposed to do. So that is the first thing. Financial interest, having a direct financial interest in the client entity, results into a self-interest threat. Another thing is close business relationship. Close business relationship. That also results into some self-interest threats. Now remember, that is also in familiarity threats. So some of these things, they cut across, but we're going to be looking at them in that case. Now, So we cannot audit the company if we have what? A close business relationship. Now, what do we mean by having a close business relationship? So, for instance, we are auditing their company. However, maybe we are not directly investing in them, but we are assisting them to get some investors, or we are assisting them to do something. So it means that beyond our traditional auditing, we are also doing a couple of other things, and that is advocacy. That is part of advocacy again, but that brings us to be very close, so that now it is like you scratch my back, I scratch your back. The more the business goes up, the more we also make money. So as auditors, we must make sure that that is avoided. Again, it can also be because of the fees that we have. Fees can also result into this. So when it comes to fees, contingency fees is one of the things. So the audit firm can say that, hey, if you help us to do A, B, and C, we will give you this. That is a contingency fee. So actually, the code of ethics does not permit or prohibit any engagement that involves contingency fee. So audit firms and auditors must ensure that in carrying out their duties, there is no contingency fee. And that is very, very important. That is very, because when there is a contingency fee, when you are doing the job, you are not thinking about the job, but you are thinking about the future benefit that you are going to be receiving. And that affects your objectivity as an auditor. And that is a self-interest threat. Then we have also low bailing. Still under the fees, low bailing. This is trying to charge a lower price or a lower fee at the initial, usually the first stage of an assignment, of an engagement, in order to obtain future engagement. So for instance, there is a certain activity, everybody is charging on the average $200,000, or let's say $200,000. And then we go in and we say that, oh, we will charge just $80,000. That is low bailing. Why are you charging $80,000? So that they could give you other non-audit or assurance services to do, or they could give you some future assignments, or recommend other clients to you in that case. So low bailing is also something that affects or that results into what? A self-interest threat. We go? So I see a comment here. Let me look at it. An interesting one. Augustine said, sometimes the whistleblowing principle is applied to report matters of illegality, yet the whistleblower is seen as a snitch and later get fired. Yes, that is why the whistleblower must be kept unknown. That's the key thing. Okay, he must be kept unknown. That is why he must be protected. The person who said it should not be known. Nobody should know the person. Okay, it's only the institution, the regulatory authorities who are supposed to know the person, but the person is not supposed to be known by the public. So for instance, you're an accountant of a company and you smell some money laundering issues and you go to the Financial Intelligence Center. This is just an example, okay? Don't take it personal or don't escalate it to anything. You go to the Financial Intelligence Center, you go and see someone there and you talk. Not knowing the person you were talking to is a board member of the company you are working for and you don't even know. Or the person knows the board chairman or the CEO of the company. So you came, you are talking, he's nodding, he said, oh, okay, so what's your name? So what is your role? Then you are excited, you are talking. After that, that person could what? Go behind you in that case. So there are extreme cases, yes. Actually, the person's identity is supposed to be hidden. But you know, we deal with humans and someone knows someone, so it could backfire or get out there in that case. So Augustine, that is what happens sometimes. Papa Echo Ama said, Nhyira, you are doing amazing. Keep the good work. Thank you, Papa Echo Ama. Thank you very much. Okay. So that is the first thing that you need to understand in that case. And another thing that we can say about self-interest threats maybe is recruiting services. This is where you see the audit firm acting as the recruiters for the client entity. What are you doing, man? You are doing other assurance services. And again, this will lead to what? Self-interest threat. So what are we saying? Self-interest threat arises as a result of the accountant or the auditor having what? A financial or non-financial interest in the client entity. Okay, so he has a financial or non-financial interest in the client entity. That results into what we mean by what? Self-interest threat. And what are we saying? Self-interest threat actually affects the objectivity of the accountant. Sometimes it may even affect the professional behavior. Hence, the professional accountant must have safeguards in order to reduce what? These type of threats or avoid them totally. Now, we will come to the safeguards in a moment as we continue with our discussion. Next one is called the self-review threat. The self-review threat. Now, listen to the name, self-review. It means you did the work, then you are auditing the work you did. Or, you know somebody who did the work, and so since you know the person, you trust the person, then you are just reviewing yourself. Okay? So that is a self-review threat. This threat arises when an auditor does work on a client, and that work may then be subject to self-checking during the subsequent audit. This is why the auditor, or that is why it is the sole responsibility of management to prepare and present the financial statements. So the auditor cannot be involved in the preparation and presentation of financial statement. Why? Because if you are involved in the preparation and presentation of financial statement, ultimately, that will lead you to audit yourself. And remember, for instance, you are preparing the tax returns of the company, calculating the asset schedule or depreciation of the company, dealing with a financial instrument, calculating goodwill on acquisitions or retained earnings on acquisition, dealing with some other issues about key elements in the financial statement. When you are doing that, or when you involve yourself in that, it results into what? Self-review threat. Now, self-review threat usually will affect your objectivity. Why? Because you know yourself. Okay? When I do something and I'm rechecking what I did, I know myself. I know I can never make a mistake. I know exactly what I was doing, and I know that it was in accordance to whatever it is that I'm doing. So you trust yourself so much so that when you are reviewing what you did, it will affect your judgment, and that affects the way you're going to really interpret the results from that. So that is self-review threat. I see some comments coming in. Let's look at that. Nayan Goodpa said, video on F7, interpretation of financial statements of consolidation, please. I think we have this topic down. Let me see. Interpretation of financial statements. Okay, we have interpretation of financial statements, but yours is in consolidate financial statements of consolidation. Okay. All right, that's good. Augustine said, any difference between self-interest threats and conflict of interest? Usually they are synonymous, because once you have self-interest, then there will be conflict of interest, because there is always conflict of interest. When conflict of interest is when you are raising your goals at the expense of the client entity. So you're looking at what you're going to get, not what the entity will have. You're looking at what will benefit you and not what the transaction has to be. So really, if you're looking at what you are going to get, which is your self-interest, which is your interest in the company, then it will result into what? Conflict of interest. So that you don't do things in line with what the company wants. You don't do things in line with what the laws want. So that is the idea there. So self-interest results into conflict of interest ultimately, because you must first have an interest so that that interest you have conflicts with that of the entity, and that is the idea about that. Nhyira Gupta said, please provide a video on revision of F7 syllables in less time. Okay, so you would want revision of F7 syllables. That's financial reporting for those of you who are not familiar with ACCA. Okay. All right. Any comments, any questions, put it in the chat box for me real quick. Okay, so that is the idea about the self-review threats. Self-review threats. Self-review threats. Now, please note that when it comes to self-review threats, if, for instance, the auditor recently was a manager or the CFO or the MD or whatever it is of the company, and he resigned recently, and his audit firm or the audit firm he was working for is the audit partner for this assignment, and he's going to be the one to audit the financial statements, then there will be self-review threat, because you just left the company. You just left the company. So chances are the financial statement that were prepared, you were involved in the preparation of the financial statement. So even though you are no longer an employee of the company, you recently left the company. For that reason, you cannot audit the company. Why? Because there will be what? Self-review threats. Unless otherwise, the audit firm will put in place some safeguards where everything you do will be done again by somebody else to ensure that whatever is done in accordance with the way it is supposed to be done. So that is the issue about self-review threat. Then let's see. Nhyira Gupta said, you are doing great job, sir. Thank you. It's a pleasure, Nhyira Gupta. It's a pleasure. Right. So let's go to the third one. Advocacy threats. Advocacy threat. Now, I gave you a freestyle of that a moment ago. Let's talk about it really in much detail a little bit. Advocacy threat. Advocacy is where the assurance or audit firm promotes a point of view or opinion to the extent that it affects subsequent objectivity of the entity. What do we mean here? To advocate means to speak on someone's behalf, to assist somebody, to do somebody on behalf of someone. Or, so for example, let's say that the client entity is having a dispute with a tax authority. Then they invite you, the audit firm, to help them. Then, now, the tax authority did not invite you. The audit firm calls you and said, oh, can you come and tell these people what is right? I don't even understand what they are doing. Then you come. Yeah, I'm the accountant. You are working, guy. Then you go and sit down there. Then you said, oh, commissioner or whatever, tax expert. What they are doing is right. I mean, we did this together. What are you doing? It's called advocacy. Are you getting it? You are sort of assisting the client entity to get that issue resolved. Why are you doing that? Now, this advocacy threat will bring some relationship between you and the client entity. That is familiarity threat. That advocacy threat will cause you to have some interest in the entity, because you know if you assist the company for them to win the case, for them to settle the dispute in their favor, definitely something will come to you at the end of the day. You won't be left alone. The CEO will say, oh, take this $5,000, use it for your petrol, $5,000 for your fuel. You get what I mean? What is happening there? Self-interest. Now, when that happens, it means now your objectivity is impaired. It means now you are not being honest with the tax authority because you are not following integrity. Why? Because you are advocating for the client entity. I hope you're getting the picture. So when you promote a point of view, when you promote an agenda of the client entity so that it compromises your objectivity, that is what we refer to as advocacy. So that is the advocacy threat. So I see some comments coming in. Foster Bashios with a thumbs up in the chat. And then I see Omoseli Frank said, nice job, Mr. Nhyira. How do I get your hard copy books in Nigeria? You can place an order of the hard copy books in on Amazon, and you can get it delivered to you through Amazon. So you can check it out on Amazon. Type in Nhyira Premium, the same name on the channel, and you can see my books. All right, on Amazon, and when you place an order, it will be shipped to you in that case, and you can get a copy of that. Or better still, you can reach us also on 050-114-9296. If you are outside Ghana, +233. All right, 050-114-9296, and then. For those of you who would want to also join our lectures, currently we have lectures ongoing for the November 2020 examination, and you want to join the lectures for the November 2020 exams, study under my mentorship, joining the lectures via Zoom, and also learn on our study portal, get access to all of our ebooks, question kits, and our environments. Then you can join and study for the ICA November 2020 exams, and you can reach us on 050-114-9296, or you can directly visit our website, NhyiraPremiumUniversity.com/courses, and enroll in a course or something like that. Okay, so let's see. Next one, familiarity threats. Familiarity threats. Now, familiarity threat arises as a result of having close relationship between members of the audit team and the client. So the key word here is close relationship. Okay, close relationship. That's very, very important. Having close relationship. So this close relationship can be because of long business association, or it can be because of relatives. Okay, being relatives. So for instance, if the audit team or members in the audit team have been the one auditing the firm for the past 5 years, for the past 10 years, I mean, there's going to be some familiarity threat here. Since there is familiarity threat, there is some level of advocacy in there. Since there is some level of advocacy there, there is going to be some level of self-interest in there. Since there is a level of self-interest there, it is going to affect your objectivity. It's going to affect your integrity as a professional accountant. That is what you need to know about that. I see a comment said, I want to know, is it bad to accept transport fare for auditing a firm? No, it depends on the materiality of the fare. So the key thing is about materiality. Okay, so let's say you live at let's just give an example. Okay, let's say you live at whatever it is. Let's say you live at Kaswa. Okay, and then you came to audit our firm at Dakoman, right? Now, Kaswa to Dakoman, that is not too huge. So if we should give you $100, or let's do Ghana cedis, 100 Ghana cedis for your TNT. I mean, that is not anything big. But if you come and I said, Gabriel, come to my office, and then you came to my office, and then I said, Gabriel, I know you are a young man, you are doing a good job. I like the way you are doing what it is that you're doing. But hey, most importantly, I want you to take this for your TNT. Then I give you $5,000. For TNT, $5,000. I mean, you don't deserve $5,000 as a TNT from Dakoman to Kaswa, and you know it. So in this case, it becomes material because this is where gifts comes in. Okay, and it's one of the threats that you need to understand. Actually, that brings in familiarity. Okay, so gifts comes in, and so you got to be careful to look at the materiality of what is happening. Hospitality is also there. So for instance, the employees or anybody that works with us, we put them into a 3-star hotel, or we take them to our bungalow and they sleep there, sleep over. The next day they come and finish the work. But when you guys came, this audit team came, we took you to a 5-star hotel, the Ambassador's Hotel, or to the Kempinski Hotel for you to lodge there. What the heck is that? That is quite material, because that is not the norm. That is not what we do. So it could be that we are enticing you. So again, you have to look at what? The materiality of what is happening in order for you to look at it. I hope, Gabriel, you get a principle there. Okay. So unfortunately, because of time constraints, I need to wrap up real quick. And then God willing, tomorrow, we're going to be concluding on the part 2 of professional ethics. And I'll give you some safeguards as well that you need to understand and what you need to do. So for instance, Gabriel, if you go and I wire $5,000 to you, do you accept it or you don't accept it? The safeguards, we're going to be discussing that as well. And I will run through this quickly again tomorrow. Then we will build it up with the safeguards. So Nana Atrem, hi, sir. Is it good to learn with a score target? Yeah, definitely it's good to learn with a score target. You need to learn with a score target. That will motivate you, that will fuel you to be able to do what it is that you need to do in order for you to become successful. So it's very important, Nana Atrem. All right, so for any inquiries that you have, like I said earlier, you want to enroll, study under my mentorship for the ICA November 2020 examination, reach us, call or WhatsApp 050-114-9296, 050-114-9296, and you can study from anywhere you are under my mentorship, via Zoom, on our study portal, so you prepare well for your examination. So thank you very much for joining the stream. It's always a pleasure coming your way. 4:30 p.m. or 1600 GMT tomorrow, we're going to be meeting, and I'm going to be seeing you in that case. So thank you very much, and we will meet same time tomorrow. Same time tomorrow, 4:30 p.m. Bye-bye.